Another report hitting the wire right now. The financial stability report out of the Fed. Those numbers crossing the wire. Michael McKee standing by right now with what they said in that report. Mike, what did we learn out of this?
Well, it's kind of interesting. There are concerns out there, which is obvious given what's going on in the banking system, but the Fed is not overly worried at this point. The major concerns that they found in the financial system were real estate valuations, very elevated, they say, although there are a lot of reasons to think that these are going to be isolated issues and not going to be something that brings down a lot of banks, even though real estate loans have to be refinanced. Household debt to GDP, they say, is modest at this point, doesn't look like a problem. And while business debt to GDP is elevated, it is slowing. The overall quote from the Fed is that notwithstanding the banking stress in March, high levels of capital and moderate interest rate risk exposures mean that a large majority of banks are resilient to potential strains from higher interest rates. So the banking system doing pretty well. Market participants were asked what their biggest concerns are, and three things jump out: inflation, banking sector stress, and U.S.-China tensions. And what's really interesting, you look at that one, you look at commercial real estate, how much they've gone up in the past couple of months. The last report was in November of 2022. The only one that eased a little bit in terms of a concern was Russia's war on Ukraine. But all those things are just about 50%, not major problems on the horizon at the moment.